presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you grabbing on problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. Yet again, I'll be with you for the entire week. We'll be back next week. Let's take a look at what we've got going on today. All right, you have the E-mini up right now about 0.39%. Same with the SPY up about roughly 0.4%. The Russell heading down off about 0.5%. You have the NQs coming down a little bit as well. You have some issues with Google today. We can talk about Apple's doing, honestly, not as good as I thought it would have, with some news that they're going to expand, or they're going to license out their pay chip. We'll talk about that a little bit. We're looking at the E-mini, looking at the SPY. You know, all your big volume for the day is kind of down. You know, it's more pronounced in the futures, right? Your massive leg down are the ones with volume. Of course, you had CPI come out today, and we spoke about the CPI from June yesterday. July was kind of in line with what a lot of people were saying, roughly around 2.9% year over year. That is certainly closer to the 2% that the Fed wants to target. I think a lot of this is going to pivot around jobs numbers going forward, right? And that's going to determine what basis point cut we're going to get come September. But as it stands now, we are moving a little bit higher up to the high of the day in the E-mini. That Russell is off. The NQs, again, you know, you have some pretty high volume lows on the day. Not moving as close as the E-mini is to the high. Composite, same deal. Those Dow futures are up. Again, this has been kind of just a little roller coaster of a day. Now, the Dow did a little bit better earlier in the day, faltered a bit. It seems stronger. These are the Dow futures here. That gold contract, we are below 2,500 as it is, probably on the news of declining inflation. Let's see, you have silver also off about 0.6%, copper off about 0.15%, crude oil, the stockpiles are huge right now. Tesla off about 3.6% currently. Steel Dynamics also off a little bit. And that dollar flat, but in its lower trading range. Okay, you bounce off that 102 area for the day, come right back up. I still think this is probably something that wants a little bit lower price. Google off about 3.27 on some discussion. You know, they obviously got labeled as a monopoly, and there's some discussion that they might get broken up. We'll see how that works, and that will be a pretty epic legal battle. Lucid up about 2.61. Just see where Palantir's sitting as it stands now. Up about 1.79, still floating around that 30 area. Assuming it's probably going to stick there for quite a while, but that seems like it's kind of new floor, right? If we take that out a little bit longer, you know, yeah. The stock is weird in the sense that it doesn't have a lot of play on it, right? I mean, this is pretty low volume. You obviously have a major drop down. This comes right back here again on the news that they're going to be working with Microsoft on some government contracts, and I think people like that. Your last big volume was this gap up February 6th. Let's talk a little bit about CPI for July. Let's take it over there. Oh, let's see here. We have a caller. Oh, check that out. Costa in Boston. Costa, how are you doing?
Good, sir. How are you?
I'm doing well. How are you doing?
I'm doing fine. I'm happy. I got Newmont at 33, hit 59 and a quarter. Next year, can I get 60 to 80 out of it if their earnings come in as projected?
You're looking for a 60 to 80 price point or 60-80?
60 to 80.
60 to 80.
That's correct.
So I remember you called me a little while ago with Newmont as well, right? And one of my things with this is it was such low volume all the time, which I get nervous at personally, right? You know, Tom is really the baller for the gold. Newmont, at least fundamentally, you know, their trial new mines are pretty like solid and stuff like that. As far as like a price point going up, you know, I can't give, you know, something exact like a 62.80 or anything like that. But if you're looking at the traditional movement with this, right, even though you have low volume, one of the high volumes you have is a nice gap up. It looks like it tested that gap up and rejected it with somewhat higher volume, right, relative to what it usually trades at. And we're still moving up. Right. Recently, you know, you've been moving up to with volume. As far as an exact price point, I can't necessarily say, right? But this does look, at least how it relatively trades, decently strong. Costa, one of the things I can definitely suggest, if you haven't done it yet, Tom goes over Newmont in his gold report. So I'd recommend checking that out as well. And then Tom, of course, will be back Monday. And I learn all the time from Tom in his analysis on these miners. So I remember last time we were talking, I was like a little bit suspect on it because of low volume. I usually try not to touch low volume stocks because I think it can get turned around so quickly. Right. But the stock looks decent, and I think rejecting that lower price on the gap up is a solid kind of behavior for this stock. So that's kind of my input on that.
Okay.
But congratulations getting it at that price point. I mean, that's pretty solid, right?
Yeah, I got a good price.
Fantastic. Well, Costa, is there anything else we can talk about today?
No, I'm all set, sir. Thank you.
Thank you so much, Costa. Take care now.
Bye-bye.
Yeah, folks, I want to say as well, if we go to TFNN.com here, I was just talking about Gold Report. This Yahoo search is wild. If you go to TFNN.com, I was talking about Gold Report with Costa. Strongly recommend checking that out. This is a July 19th update on it, up nearly 90.57% in that portfolio. Pretty solid. We've had some moves since then, but it's 30-day money-back guarantee. If it's your first time subscribing, for whatever reason it doesn't work for you, that's totally fine. But everything that I know about how metals work absolutely comes from talking with Tom. You know, luckily I get to work in the office with him and reading this when it gets published every Monday. And I want to say as well on that point, if we wait for the home to load up, we have Market Insights. We're actually running a deal on Market Insights right now, which is pretty awesome. You just type in, when you go ahead and hit subscribe, right? When you're checking out, you put in MI75 off, and you're good to go. That's going to save you 75% off your first month. And Tom has been crushing it compared to the market in Market Insights. Very awesome deal. Let's go back to what we were saying, talking a little bit about CPI. So you see here on the year over year, we're up 2.9 currently. For the month, you had an increase in all items of about 0.2 month over month. Well, let's talk about it a little bit when we get back. Folks, stay right there. We'll be right back talking a little bit about CPI.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. He will be back starting next week. Let's take a look at CPI. Again, we have a year over year, about 12.9%. You have a little increase in all items, up 0.2. See, gasoline pretty much flat here. Fuel oil up a little bit off a major decrease in June, which we were talking about yesterday. See, obviously the used cars and trucks still being, it was crazy, that kind of pump up in them. Then let's see, you have medical up a little bit, shelter driving a big thing over a year, even this month, and then transportation services as well. So like rent and owner's equivalent rent, rose 0.5% to 0.4% respectively on a monthly basis in July. This is slightly higher than June's 0.3%. Owner's equivalent rent is the hypothetical rent a homeowner would pay for the same property. Broadly, July's CPI rose 0.2% over the previous month, an uptick from the 0.1%. And basically, the shelter inflation slowdown is just kind of lagging. There's less entrance and everything like that. And you can still see here, even with everything in July, you're still having an increase of 5% year over year. Yeah. It's saying, so the Fed believes it has done its job on housing, but it's waiting for the final report card. So by the time the shelter component makes it all the way back down to where it was pre-pandemic, it'll have some kind of final check mark. But until then, we're expecting it to slowly continue to catch up to the market. Anyways, that's always been the major concern, right? And things are so expensive. This is bringing it to this very strange poll that was taken, right? Where actually a lot of Americans believe that we're in a recession. Yeah, so here it is. This is from CNBC. It said 59% of Americans wrongly think the U.S. is in a recession. This is from a firm. Obviously, we're not, right? I mean, recession is opposite to an inflationary environment, but what's going on? And really what it is, I think, is a lot of income disparity that's occurring. What I was talking about when the rates were really coming up and people were starting to feel it is what ends up happening is people on the lower end of the income get squeezed the hardest. Things that get targeted by inflation, things that everyone consumes. And so I always bring up this V-shaped kind of deal, right? And you were seeing early on with the increase in rates that you still had luxury brands doing pretty well, right? So these are wealthier Americans kind of floating the economy and stuff like that. That has stumbled a little bit, which is nice, and it kind of shows that inflation truly is coming down. But it just seems that people at the lower strata get burned harder a little bit longer until it affects people who have more money. And this is why I think you're getting this really weird dissonance, right, between what the market's actually doing versus the economy as a whole versus how the individual American believes it, right? I mean, we're getting closer to that 2%, but people are still struggling with it. I don't know how we solve that, right, as a nation. I think a lot of problems as well is a lot of the capital generation that's going to occur in the future is going to be by these large tech companies, you know, utilizing AI, whether they're providing the service or they're utilizing it for certain, you know, businesses. I think this can get worse. This affects all of us, right? Because it affects how people vote in elections. It affects just how people interact with each other. So it's very unique to kind of see that. And again, I would say, you know, we were talking about shipments yesterday, so like imports to America. That is continuing to increase or hold steady at least, which is what you would expect to see decline if you're going into a recessionary period. And you're just not seeing that. It's interesting. I've always said it might be in the future important for the Fed to kind of maybe reanalyze how they approach reducing inflation, because I think it does really squeeze people. You've seen an uptick. Obviously, a lot of people are using their credit cards, right, to buy like basic goods. You've seen an uptick in defaults, at least among like small banks. But I think, and I've seen some people say that this is an example of a lot of weakness in the economy. I would think, though, you would expect that with a higher interest rate environment. You would see more people default. Obviously, inflation adds to it because more people are interacting with the cards as well. But I'm not sure that's necessarily a signal in any capacity that there's something that's even weaker. Anyways, very, very interesting kind of report. I would also say too, when you're seeing these big moves up on this good inflation data, I mean, this is still, we're still at 2.9, you know. This is still on less volume. Now, you had increasing volume yesterday, but it's still lower than the low, lower volume than the low that you had. It still seems like it's something that wants to test. You have a lower VIX right now. It seems like this is kind of like buyer's market right now, but there's not a lot of them. And it's kind of a weird market right now. I mean, traditional technical analysis, at least with volume, would tell you that we're going to retest that area, you know, and see, if we can reject it, or if not, we sit there and consolidate or whatever. But anyways, kind of a strange thing going on right now. Let's move on with Google. 1 second here. So trading off about 314. So one of the new things is, we talk about a lot here, how does the investment in AI translate to higher earnings, or people more willing to interact with a company because they have AI. So Google rolls out the Pixel 9 phones. This is early because of the AI race, right? So Google on Tuesday unveiled its first generation of Pixel phones, providing that the maker of the Android software had started the next iPhone in the race to bring more artificial intelligence services to devices that have become people's constant companions. People like them. People like them a lot. And I think that is going to be a slow adoption, but we were talking about yesterday, they had 14% of new PC purchases being these AI computers. And so I think people are hyped to get them a little bit, right? Now, why are we down? Well, because maybe Android gets severed from Google. This is a big question, right? They were determined to be a monopoly in a court of law, and there's going to be this discussion about breaking it up from what Google does with AI, to their search engine, to their internet platform, and then things like Android as well. And this is using Gemini technology, which is some interesting stuff. Some more income that they can get from this, the advanced Gemini assistant will require a $20 monthly subscription that will be free for 1 year for all buyers. The standard Pixel will sell for $800, which is an $100 increase from last year, and the Pro will sell for $1,000 depending on the size. And the more they add these new AI capabilities, the more they're going to pay into it. Now, that kind of floats them for a little while to get the early adopters to pay a lot of money, and then that kind of fizzles out because the average person doesn't, I would argue, not really care about having the best AI technology with it. Let's talk about UBS. All right. Because they actually had good earnings. Okay. So up 5.4%. The Swiss banking giant UBS on Wednesday smashed net profit expectations for the second quarter. Well, listen, we'll talk about it when we get back. Stay right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. We were talking a little bit about UBS and their earnings, but we actually have a caller on the line, and that is going to be Jose in Lakeland. Jose, how are you doing?
Good. Thank you. Good afternoon.
Yeah.
I guess Tom's in Tahiti. He hasn't been in the big chair for a while.
Oh, he's hanging out. So I'm filling in for him while he's gone, but he'll be back. It's good to hear from you again, Jose. I know we were talking a little bit ago while I was filling in for him as well. What are we looking at today?
Yeah. Well, I mean, I don't think Tom likes when we interject politics into the show, but you kind of have to at this point. I think Mr. Donald Trump, I heard he listens to the show. I don't know. I heard through the grapevine he listens to the show, and I just want to shout out a little message to him and his campaign, and it's this. Iceberg, dead ahead.
Yeah. So when you're looking at, you're calling in about the interest rates, what are you seeing with it? I mean, do you think we're going to hit like a bigger slowdown? You're saying iceberg, right? I mean,
it's hard to ignore the fact that he's already jawboning the Fed with, I want control over interest rates.
Yes.
That means that's code for I either want the Fed gone and I'll take it from here. He'll probably disband the FOMC, and but you can bet he could care less about inflation, and he's going to forget quarter point drops every 6 months. He wants 3/4 to a full point each meeting, or when he says so. So that's going to have a huge impact on, on a lot of things. Market, the real estate.
That is a really, it was unique, right? You also were seeing, I think, Biden a few months ago said something about him lowering the interest rates himself, right? So there's this weird conversation. For everyone who doesn't know, what the Fed does is not tied to what the executive branch does at all. I think we had a few conflicts in our early start to our country through that, namely with Andrew Jackson, right? We had central banks, 2 of them, and they were shut down by him, and thus the Fed was created a little bit while later. It is a unique thing trying to bring essentially the central bank under the executive branch's influence. I'm not sure what the legality of that is, what the precedents at all. Or how that would be achieved. But you're right, you run the risk, right? I would say this is even a risk of having the president appoint people. Now, I wouldn't know how you would do it, right? But, I think Powell has done a very good job of staying out of politics in a major way, and that's what you want when you have, a guy running the federal bank who's determining the Fed fund rate.
Excuse me, but Powell's done a good job keeping out of politics, but I don't know if he's been doing a good job, period. I mean, come on. 2018, I think inflation was running amok then, and what was he doing? He was kowtowing to Donald Trump during his 4-year reign of terror from 2016 to 20. Donald Trump was, if anybody cares to YouTube, Donald Trump at a speech somewhere in America saying he wants rates to 0. There's no inflation around. I mean, the inflation was coming back in a big way in 2018. I think the Fed dropped the ball there, but I don't know.
What are you anticipating for September? Are you seeing a rate cut?
Well, they don't have to cut. This is the new Fed. This isn't the Fed of old. Greenspan, Paul Volcker, and the rest of them. I think they call it zero neutrality. It's neither restricting or accommodating.
That's right.
They don't have to drop interest rates. They've been doing this for 2 years now with the promise of 4 cuts this year, remember?
Yes.
And it buoys the market, and it buoys the financial markets in a big way, and they don't even have to lower rates. It's just the perception that they're going to. So I think they boxed themselves in the corner for September cut. Yeah, absolutely. Yeah, the numbers today look like they're going to have to do a quarter point. But my point is, Trump's going to come back and inflation be damned. He's going to say, quarter point? Are you nuts? We're going down 3/4, if not a full point.
Interesting point. Well, Jose, thank you for coming on. And Sharon, we always love having you on, so call in soon, okay?
Okay, thank you.
Take care, Jose. Yeah, it's interesting. I mean, I was talking with Tommy about this too, right? I mean, the economy, at least the stock market, is doing, relatively okay at this. Now, housing is a little bit expensive right now. Mortgages are expensive. They're coming off a little bit as well. But we're starting to get back to kind of, essentially fundamental plays in a sense, right? Where the earnings are solid and the outlook is solid, and it's not based on this just free capital flow when you have the most primary rate being zero, right? That's what, when you have such like low cost of capital, that's where you get these companies getting just pumped and pumped and pumped with cash and doing a bunch of stuff that doesn't, isn't necessarily profitable right there in the minute. Now, there's still some hangovers from the way this market evolved with very long-term quantitative easing. And that's going to be, stuff with Google. So going on with AI, people want to buy into it. And I would argue you could probably make a more modern argument for it now than just back then, where it's like, hey, the DCF model looks good because the rate of return is pretty low, right? Or the internal rate is like pretty low. So I don't know. It's weird. I definitely believe they're going to lower the interest rates. But the question is, it'll be interesting to see how the market reacts with it, right? I mean, do we get inflation coming back immediately afterwards? I'm not entirely sure. I wonder, we've spoken about a lot on here, all these excess cash reserves, when that starts entering the market, what that does. It'll be interesting to see what happens with it. Well, we're talking about UBS a little bit. Let's go over that a little bit. Net profit attributable to shareholders came in at $1.1 billion for the period versus a company compiled consensus forecast of $528 million. Profit was nonetheless lower than the $1.755 billion reported in the first quarter. Of course, they are up right now about 5.38%. Group revenue also beat forecasts in the second quarter, coming in at $11.9 billion versus the compiled poll of $11.5. UBS said strong capital market activity had partially offset a drag from net interest income, which it had previously flagged would be weaker due to lower lending and deposit volumes and lower Swiss interest. Okay, so the capital market's still strong there. In the bank's global wealth management unit, revenue increased 15% to $6 billion, which UBS said was largely due to the consolidation of Credit Suisse. Revenue in the investment bank unit leapt 38%. Yeah, so they're expecting to end 2024 with a cumulative gross savings from the Credit Suisse deal of $7 billion out of a target of $13 billion. So interesting stuff for UBS as well. So folks, stay right there. We'll be right back. If you want to give us a call, go ahead and do so, because we love hearing from you. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider funds investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. We were taking a look at UBS, but let's move over to Intel because they just blew whatever gains they had yesterday off about. Yeah, I mean, they're just moving really sideways down at this level here. Off about 2.8%. They're divesting the stake in chip designer ARM as it continues to lay off thousands. The U.S. company said in a regulatory filing on Tuesday that it no longer owns 1.18 million shares in the U.K. chip maker. Let's see what ARM is doing right now. Yeah, moving up on no volume, but still up about 1.38%. Let's go back over to this old dog here. Intel's divestment of ARM shares followed the delivery of one of its worst earning reports. We were talking about that. They're also cutting 15,000 to do cutbacks on business expenses. So this is the thing. How long does it take for them to restructure, right? I mean, they're trimming the fat off where other tech companies in their same space trim the fat off within like the first 6 months of higher interest rates, right? And understanding where they needed to pivot themselves. The more and more that comes out that's like fundamental with this company, just the more I don't like it and what it's doing. I don't know what happens with them going forward. I don't see a near term and like that, like within the year, way for them to turn around and convince anyone. And what I would argue, too, is that if they had anything good in the chamber, they would probably be alluding to it right now. But the best they can give us is that they're going to try to get some access to short-term capital by liquidating these shares and then fire a bunch of people. So then what? Do they have a new position starting 2025 or the Q2, Q3 of 2025? I have no idea. When I was in college, we would talk about these different ways you could qualify businesses and you had one which was like the cash cow, right? You could break that down even further, and I think that's what you could do with Intel here, where they were a cash cow for a while, this massive legacy. But the problem with cash cows, and this gets almost like Spenglerian in a sense, right? But these large entities are not able to pivot very well, right? Because they nailed it very early on, but the meta changes, and it's hard to pivot when the meta changes, especially if you're not anticipating it or driving that change. Same thing with IBM, right? That's why nobody wants to do anything with IBM. They have, very crystallized concepts of how they go forward. Obviously, they charge a lot. I'm talking about IBM now. They charge a lot for their services and their aid and stuff like that. And other companies that are new, these organisms evolve in a new environment, and they're better adapted to it, essentially. So anyways, yeah, pretty rough for Intel, and I think they're probably going to stay around this level as well. That is a massive ceiling that they're going to have to bust through, and I think they only bust through that on some really solid fundamental news, and I don't see what that is because they're not talking about anything like that. So, yeah, rough for Intel for sure. Let's see. We were talking about in the on the YouTube chat about September being a negative month. This is X saying that. And shout out to everyone on YouTube. I know we give a lot of love to the Discord people, which are not on it, get on it. But if you were a YouTube OG, love that you're there. So talking about September usually being a negative month, first 2 weeks of October. And then he says, but this could be different with the Fed lowering rates. That's true. You could get a major rally. One of the things I was bringing up as well, which I fear might be happening to some extent, is you might get kind of like overzealous pre-cut buying, right? It seems like Costa was saying this as well, that discussion of rate cuts was always propping up the market overall, right? And you're waiting for this capital to get cheaper, so you're dumping all this money into companies that do better and are valued better when there's low cost capital. And once that happens, it shoots off. Yeah. What happens if they don't lower rates any further? Exactly what Costa was saying as well. This isn't like Volcker. This isn't like a doomsday rate increase that we have to drastically cut once we start seeing stuff. I mean, you could sit at rates similar to this for quite a while. So, and I'd be very interested to know, if you know anything about this, send me an email at jacob@tfnn.com. But, for every 25 basis points versus 50 basis points cut, how much economic activity that generates, that would be super cool to find out if you guys know anything about that. If not, I'm still going to look it up anyways. We'll see if we can talk about it a little bit tomorrow. You have Cisco coming out with earnings. I don't believe they released them yet. I think it's coming after the day here. But they're expecting revenues of about $13.52 billion. That's a decline of 11%. Of course, they're doing some cuts job-wise in their networking segment. Their XDR systems are kind of cool to look at. Now, that is an automated way to kind of determine irregular activity on networks, which is pretty cool. It has linked AI with the IoT and distributed computing, which is pretty solid. Let's see here. In the first quarter, networking revenues is currently pegged at $6.76 billion. So we'll see if they do well. And really, it's the forward guidance for Cisco. Now, yesterday, this isn't necessarily with investing or anything like that, but I just like bringing up interesting stuff. NIST did end up validating new encryption standards to compete against quantum computing. And I will forever try to find ways to get kind of access to this. I know IBM has a lot of quantum computing, but I just kind of dogged IBM for a little bit, which I think is due. But they did end up developing or accepting new encryption standards. It's called the module lattice-based key encapsulation. And then same thing with digital signature and then a stateless hash. It's with a something called Kyber. So public key encapsulation, crystals, Kyber, along with digital signature schemes, 3 of those, crystals as well, dilithium, Falcon, and Sphinx Plus. It's a pretty cool way they do it, right? So essentially, when they're generating the encryption, they're using a matrix, and then you add a multiplier to that, which is like a vector. So instead of just doing like a 2D thing in the past, like a linear kind of increase with just a single exponent like we were talking about yesterday, you can add a vector to the matrix. That's what they're calling a lattice, essentially. And, if you only have those 2 qualities inside of the equation, it's pretty easy to find out what the secret vector is because you know what the front-facing matrix is. But they add in this extra kind of fuzzer. So it makes it a little bit hard to understand what the original secret key is. Very unique stuff. That's that in a very, very simple way. But kind of cool stuff. Again, always recommend reading on stuff like this because I think it's very pertinent. And it's kind of, I think, has some, it helps thinking about other things in a fundamental way, I would say. Let's take a look at K here. Kellanova. So some huge moves, right? Mars is acquiring Kellanova. These guys with like Eggo and Cheez-Its. That is some massive moves for this company, trading at up 7.68 right now. So Mars is acquiring Kellanova for $35.9 billion in cash. Mars is also acquiring Kellogg, spinoff, okay, blah, blah, blah. Pretty interesting stuff for it. We'll talk a little bit more about that when we get back. Stay right there.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We have a short segment right now. We're trading up about 0.33% in the E-mini. Still, these large green movements up or on lighter volume. I do probably anticipate, again, with this movement higher, some kind of pullback to that high volume low. The question is, when does that get triggered? We also have Tim Ord on tomorrow. Of course, he was on Tuesday, and I'm sure he's going to have some really solid insights for that as well. The NQ trading up about 0.10% right now, and the gold contract off about a near percent. Let's talk a little bit about Apple. Okay, so they're up about 0.4% right now. Take that off. Let's get a broader picture of it. They're going to open their payment chip to third parties and charge fees, which is pretty solid. So the move announced Wednesday follows years of pressure from regulators, including those in the European Union. Apple said it will allow developers to use the component starting in iOS 18.1. The payment chip relies on technology called NFC, or Near Field Communications, to share information when the phone is near another device. Yeah, I mean, this is even like RFID chips, right? The same kind of concept. Anyways, Apple has been reluctant to open up the chips to developers with security concerns, which is fine. They tend to be really encapsulated in a major way, right? I mean, even with their creation of some of their chips and stuff like that, I mean, the reason they did it, and they were poised so well for this, is because they just wanted everything to be made in-house, and they could have complete control over it, which is pretty smart for that company in a major way. Talk a little bit as well before we wrap up the day here with Eli Lilly. In fact, I want to look at HIMSS first to see how they're doing on that news. And yeah, they're down 3.2% because Lilly is sending cease and desist orders to companies that are using compound pharmacies to develop some more of these GLP-1 drugs. Now, this is interesting because it is still on a supply issue with the FDA. So they're still legally allowed to make this. Kind of interesting. Folks, thank you so much for joining me. I hope you all have a great rest of your day. Tune in tomorrow. We have Tim Ord of the Ord Oracle on, and we're going to start the day off with Tommy O'Brien at 9 a.m. in the morning market kickoff. Take care.
Building wealth,